Welcome to Rushing. Simplified news for busy investors. This is the first short daily financial audio newsletter made by a woman for the whole busy world that delivers clear headlines and quick context to help you get ready faster before the market opens. In under 5 minutes, you get the top market movers, why they matter and which sectors to watch so you can act with less noise and more clarity. Everything we offer here is purely educational, not advice, but you are a big boy or a big girl and you heard it many times, so you know this already and you are still here. Thank you for this and enjoy. Let's dive in. Good Tuesday pre-market, October 7th. 5 movers, tight and tradable. First headline: Japan surges on policy shift. What is it? Sanai Takaichi's leadership win sparked a risk-on wave in Tokyo. Nikkei pushed to new highs while the yen and long-dated JGBs sold off on expectations for fiscal easing. Gold and Bitcoin also printed records as politics and the shutdown nudged flows into alternatives. Why magnify it? A weaker yen plus stimulus hopes support Japan exporters and cyclicals. If BOJ hike bets get pushed out, Japan's equity bid can extend, but FX volatility is your hedge risk. Possible affected sectors: Japan exporters, autos, semiconductors, global luxury, Asia funds, FX carry trades. Second headline: Tech and AI see heat with shaky hands. What it means? The tech rally lost steam into the close, even as momentum strategies have posted a strong multi-week run. The debate over an AI bubble is front and center, which makes late-day reversals more likely. Why magnify it? Leadership can keep working, but crowded positions and high multiples raise gap risk around headlines and earnings. Trade smaller, respect your stops and expect dispersion inside AI. Possible affected sectors: megacap tech, AI hardware and cloud, high beta growth, IPO pipeline, momentum factor funds. Third headline: Oil pops after a modest OPEC Plus hike. What it means? OPEC Plus approved a smaller than expected production increase for November and crude bounced roughly 1%. The signal is careful supply management rather than a flood of barrels. Why magnify it? A restrained path tempers the inflation impulse and can support duration, but softer demand keeps a lid on energy equity upside unless cracks and inventories tighten. Possible affected sectors: energy producers, refiners, oilfield services, airlines and transports, inflation-linked bonds. Fourth headline: U.S. shutdown and a data vacuum. What it means? The government shutdown is delaying key releases like payrolls and other agency reports. Stock futures were muted as traders shifted focus to earnings and the upcoming Fed minutes. Why magnify it? With hard data on pause, guidance and private surveys steer the curve. A dovish read lifts duration and defensives. Tough talk from Fed speakers can wobble equities leaning on easy policy stories. Possible affected sectors: treasuries across the curve, housing and utilities, banks via net interest margins, gold and dollar pairs. Last headline: playbook check for the week. Momentum and earnings. What it means? Momentum remains the dominant style factor while earnings from PepsiCo, Delta and Constellation brands will test consumer and travel demand and set the tone for guidance. Why magnify it? If results confirm steady demand, the rally can broaden beyond a narrow tech lead. Mrs. May flip crowded momentum the other way. Possible affected sectors: consumer staples and beverages, airlines and leisure, quant factor funds, broad U.S. indexes. That is your 3 to 5 minute brief. For the full rundown in text, check ymagnify.com. Thanks for listening to Rushing. If this helps, the best free way to support is to subscribe, turn on notifications and share it with other people to help them as well. That was Yuna. See you in the next episode.